so many people have stayed for the final session in what has been yet another wonderful Australian Gold Conference. I think, I know I went to the first one, and I've probably been to most of them, and it's just been amazing how the gold market has developed over that time. It's had its ups and downs. But anyway, look, I'm going to give you a whole lot of charts, and I'm going to talk about heating the markets, because there are so many commentators out there who just talk the talk and talk the conventional wisdom. And if you talk the conventional wisdom, you don't necessarily make money. So what we try and do is heed the markets, work out what the markets are doing. Now look, I'm a geologist by training, and I've been in the financial markets a long time, and most of the people who know me, I've been at Bankers Trust and Deutsche Bank and Macquarie Bank, and I've been running Martin Place Securities since 2000. Done 30-something IPOs, and the last one I did was Tolu Minerals. Who got some Tolu Minerals? TOK? Last time I looked, it was up 70% from the issue price last year, when people told me I couldn't do a gold IPO, and I certainly couldn't do a PNG IPO. So there. We raised $17.5 million, and it's just been great. Okay, so who here is concerned that the gold price might be a bit too ahead of itself? Are there any outright bears? I know this is a gold conference. I can't imagine that we'll have too many bears. Now, what I'm going to talk about today, I think, is an inflection point, a real inflection point in the world economy. This is what the markets are telling me. It's not what I read in The Economist or the Wall Street Journal or Financial Review. It's what the markets are telling me. And I put it together and try and build a picture of what the world is going to be, what sort of outlook we have for our investments. Now, who's bearish on the US stock market? Who are super bears on the US stock market? Who are super bears on the Chinese stock market? Chinese stock market's been in a 15-year bear market, and you're still bearish? Anyway, you can't believe that. 15 years has been going down. Now, anyone bullish on the A dollar? Who's bearish on the A dollar? Who's bearish on the A dollar? Oh, anyway, it doesn't matter. Let's go and have a look at the markets and see what they're saying. So, long-term gold. This is very exciting. This was a terrible period for the gold sector, as we know, into 2000. We had the dot-com boom and whatever, but we've had a really nice, strong bull market, hell of a correction, and now we're on our way up again. And I reckon we'll get up to about 3,300. I think we'll get to 2,800 next month, and hopefully we'll get to 3,000 by the end of the year, but I think we'll get 3,300 in the first quarter of next year. So, why is gold in a bull market? Simple question. I'm going to focus on the bond markets, because the bond markets are the biggest markets. The US Treasury market's the biggest market outside of the currencies. So I'm going to focus on the bond market, see what that's telling us. Now, the US dollar. Now who's bearish on the US dollar again? Any bulls? Okay. And we could talk about fiat currencies. We know all about the debt, and we've had all these commentators over the last couple of days talking about the debt position, what the Fed's going to do with interest rates, and the US dollar falling and all that sort of stuff. But let's see what the markets are telling us. Then we're going to talk about the BRICS. Who thinks the BRICS are a good idea? We're getting engagement. This is going to be great. And the global debt, which we all know is absolutely out of control. It's absolutely out of control. So what's going to happen about it? Then we could talk about central banks. Now, we know the central banks have been buying a lot of gold, particularly non-Western central banks, and consequently we've got a really fascinating tightness in the market which is developing. But do keep in mind that the biggest buyers of gold are always the Chinese and the Indians, not the banks. So that's a really important thing to follow. You've got 1,400 million people in each of those China and India economies. Then we've got, I'm going to come back to the central banks a bit later, but we've got the stock markets. Everyone's nervous. Is it going to go up? Is it going to go down? Crash? Boom? Whatever. And geopolitics now, we've got the issue in the Middle East, we've got things in Ukraine and Russia, enough to make anyone nervous, Taiwan. And yeah, it's just uncertain. I mean, even to see what France did, trying to take the head of Telegram and put him in jail just to stop freedom of speech. And to have that ridiculous thing about Regis Resources with McPhillamys. This is sovereign risk. So we've got a lot of geopolitics happening everywhere. So we've got to think about all that. Now, I talked before about Asian demand for lots of raw materials, and it depends what happens in China because it's so important in demand for gold. We've also talked about, or had people talk about, the rise of the gold ETFs and how they're starting to pick up, particularly in North America. In Asia, they've been growing strongly. In Europe, they've been going flat, and they were coming down in the US, but now they're starting to rise again. And that World War III, is it possible? NATO doing some pretty ridiculous things, Russia responding, Ukraine doing outrageous things. What's happening between Iran and Israel, Lebanon, the Houthis in Yemen, a lot of things that are going around. And then we could talk about the commentators. Now, the commentators are the people that tell you what's going on in the world, and I can tell you that over the last couple of days there have been lots of people that I would quite disagree with, because what they've said, I think, is just factually incorrect. So, heed the markets, not the commentators. That's what I say. So what are the markets telling us? Well, first of all, we've got to look at the biggest market in the world, which is Treasury bonds. And we had a 40-year bull market in interest rates, or 40-year bear market in bonds. And then we had this another 40 years of bull market, and we've got this little thing happening here. Now, this is quite fascinating. Does it mean that we've got the end of a real bear market in the bonds? Because it's the biggest market in the world. A lot of wealth was lost in that fall. The bonds came back as much as 60%. Can you imagine? You've got a 10 or 20, 30-year bond, government bond, and you've lost 40 to 50% in the value of it. It's far more devastating in the bond market than it is in the equity market. So what I want you to see here is just some of these yields on US treasuries. Now look, 1 year is turning down, 5 years turning down, 10 years and 30 years. And I see quite a significant fall in these interest rates. Now these interest rates are leading the Fed. The Fed's going to respond to what the bond market's doing. It's not going to be the Fed telling them what to do, it's the bond market leading. Now, this is this extraordinary decline that we saw, which is just massive. Look, 190 to 110, I mean, that's 45% capital loss. Capital loss in a bond portfolio is just massive. So we've had this 40-year bull market in bond prices, and when this thing started to break down, we broke a 30-year, and then we came down, we broke a 40-year, and we're down here, and we're doing a major turn. Now, will we just go up here to do a goodbye kiss and collapse, or is it something much, much bigger? The interest rates, the yields on the graphs before are telling us that those interest rates are coming down. And when we start talking about the action of the Fed, well, the Fed's always following what the market's telling it. Now, people have talked about the Fed and changing and the impact on gold. And when I look at that, I can't see any one-to-one relationship whatever with the Fed's action and the price of gold. Now, coming to stocks. The S&P 500 is in this superb long-term bull market, and there's nothing that I see in this that suggests there's any possibility of a market crash. Now, famous last words. How would I know? I don't know. But this channel analysis is very, very helpful understanding what's going on. Now, one of the things which makes me really bullish on the US equity market is what's happening in the small caps. Now, the S&P 600 small cap index is essentially the same as the Russell 2000. And would you believe it or not, but if you put the All Ords up against this, it's about the same. Can you believe that? But then this other thing which is really fascinating, this is the advanced decline line, which basically means it just takes the cumulative number of rises, less falls, and this has broken out. Small caps have broken to the upside. That's not what you see in a bear market. That's what you see in a bull market. Now, so much of the commentary we've had is all about the Fed and the US debt and the US dollar and the US bond market and whatever. And it's going to be terrible for the US because it's just got too much debt and it's awful and horrible. Well, and everyone's saying, well, the dollars, the number of people today who've said that the US dollar has declined. What has it declined against? What are you going to take, what currency are you going to go and buy instead of your US dollars? Let me tell you, it ain't going to be, it's not going to be the euro. Now this is really fascinating. We're talking about interest rates falling in the US, but this to me is that the German bond rates are rising. And while we've got these rising, the German stock market is going parabolic. It's going higher. Have a look at the euro. The euro, for the US dollar bears, the euro has broken a 50-year uptrend. Now, it hasn't been in place for 50 years, but if you put the Deutschmark instead and do that, basically this has broken a 50-year uptrend. We've broken down and we've just rallied back and we're up in here. And if we look at this, and I do all these lines and squiggles and whatever, but it's very, very helpful. One of the things that you always look for when you get a break line and you get a goodbye kiss, it comes up to kiss the break line and then collapses. And I think that's what we're going to see in the euro for it to come down quite sharply. Now, it's not just the euro. Now, remember, just a few weeks ago, the Japanese stock market fell 25–30%. Everyone said it's the end of the world, or the yen carries over, yen carry trade, but the Bank of Japan will step in. Well, they stepped in. We found that the yields which are up here fell, but they've gone back up again, and they're going much, much higher. And the stock market, there it fell 30%. It's gone back up. Parabolic bull market in the Japanese stock market. The Japanese yen, 50. This is sorry. You've got to put these things around. This is measuring yen per dollar, and this is measuring the other way around. I'm sorry, but anyway, what this means is that 50-year uptrend, that when this is coming down, it means that the yen's in a bull market. That's broken a 50-year uptrend, so the yen is declining, and it's going to go up there. Look at all these goodbye kisses that we're getting. Look at this peak collapse. Junk status. There'll be hyperinflation, I think, in Japan. British pound. Now, are you going to sell your dollars to buy this? No, you're not. And we see the same thing. This is just coming up for goodbye kiss on the break line. And then we can look at the Chinese yuan. There's a powerful move coming out. Now, we had a speaker yesterday talking about a devaluation of the yuan. How are you going to go and buy a BRIC currency when they're just about to devalue the yuan? It doesn't make sense. And the other thing that we can watch in all these currencies is what the gold price is doing. And when I look at that, that's all ready to have a really big move. So there's going to be a decline or a cut in the Chinese yuan. Now, just again talking about the BRICS, we've got Brazil, Russia, India, and China. Now, these are all in 40-year bear markets. Absolutely nothing to suggest to me that they're about to turn. So all the stuff about the BRICS, now you need to understand that there's a trade account in US dollars and there's a capital account. There's about $100 trillion tied up in bonds, and almost all of those are really denominated in US dollars. And if we look at the value of the US stock market, again, that's measured in dollars. If we look at the capital side, it's really quite immense. If we look at the trade side, now someone mentioned yesterday that the energy is, the energy market makes up about $10 trillion. Well, by the time you net out the stuff which is internally used and not part of internal trade, we're talking about less than $1 trillion in the trade side that would be using these BRICS. So against $100 trillion in terms of the capital markets, it's not a lot. Now, the next part of all this is that, I'm sorry, there's lots of squiggles on lines, but this is the way I work. This is the US dollar index. My target's up here. Big bull market in the US dollar. A big bull market. Why would that happen? Why would that happen? And if we look at a broad index, now remember this is the DXY, which is 57% euro and about 10 to 12% for Canadian dollar, sterling, and the yen. That's really all about the euro, which basically says the euro is on its way down a lot. And against all the other currencies, this is about to make new highs and go much higher. So, where do we fit in all this? Here in Australia, we're watching all this stuff going on. We've got our gold production, we've got our iron ore production, coal, LNG. We've got something really, really interesting happening here. Now, this is the A dollar going back to 1914. And you can see we broke that downtrend. And we're coming up into something really, really interesting. I'm really quite bullish. A dollar bullish against a strong US dollar. So if we look at this wedge here and a wedge there, we're breaking out from that wedge. So the A dollar is going higher. So we're here to talk about gold. So basically, we're saying that some extraordinary things are happening in these major markets around the world. So we've got gold at all-time highs, and all-time highs in all currencies now. Central bank buying is at record level. And gold is rising against so many other asset classes. And then we're going to look at the North American gold stocks, because look, there's hardly any institutional investment in Australian gold stocks. The generalists don't understand the sector's underperformed. Most of the stocks are Northern Stars and the Evolutions. Newmont obviously is a US thing. Most of them are run by North American investors. So, the gold price, in the medium term, we looked at the long term, we're looking at that 3,300. This is the gold ETF, and I use that because it takes the premium that we see in the futures market. So it broke out of this wonderful consolidation box, off to new highs. We'll get up to about 2,800 reasonably soon. That parabola looks great. On the shorter term, parabola looks superb, up to 2,800. These are very, very powerful markets. And this one is the very, very short term. This is a 15-minute chart. Now, how many people here are familiar with Elliott wave? Elliott wave, too. So we are actually in a wave 3. We're already within a wave 3 of a bigger picture. But the way I count these things, we've had a 1, 2, a 1, 2, 1, 2, 1, 2, 1, 2, 1, pop. I think in the next 2 weeks we'll probably see a very, very strong move in the gold price to the upside. Now, gold in $8, again, it's running parabolic. We're up to $3,700. Now, Northern Star, a week or so ago, reported 30 cents per share earnings on the basis of $3,040 received gold price. Now, the gold price today is $700 higher, and on their gold production and taking 65% after tax of that revenue, that's another 40 cents. So, sorry, so it was another, it's another 40 cents, such that the company's earning 70 cents a share. So the leverage to companies like Northern Star is very, very high, and it gives them a very, very attractive earnings yield, and that they'll be paying out quite good dividends. Now, when we look at gold against some of these other markets, gold against the Dow is all ready to break, against the S&P 500. These are big, big turning points. These are long-term moves. And as I say, what we're seeing is something which is quite fundamental. There's an inflection point. North American stocks, this is the XAU, which I like to follow, the Philadelphia Gold Index. It's essentially been the same level 40 years ago. But this downtrend here has been broken. We've done a lot of consolidation. We're breaking out here, and this will come up to the previous highs, I think, very, very quickly. And you can see in the shorter term, this is moving higher. Now, what people have talked about is the poor performance of gold stocks relative to gold, and that's been a global thing. All the premium, the option premium, whatever that existed in the XAU for the previous 20, 30 years has been absolutely unwound. What this is saying is that we are going to break out through here, and this is going to be a very, very strong move of gold stocks against the gold price. It's also going to be a strong move of the gold price against gold stocks against general stocks and against T-bonds. It's already moving. So asset allocators have got to look at that. This is one of my favourite charts. I'm bullish on the $A, and it's amazing. I used to do this, and I had an R squared up until about here. The correlation was 0.92, which is unbelievable. It's an extraordinary correlation between the Philadelphia Gold Index and the $A. Now, we're catching up here. They're ahead of us, but we'll catch up. I'm looking for an $A which will be over parity in the next 4 or 5 years. I am. Now, this is our ASX Gold Index. Now, we've got this long term, this goes back to 2007. The ASX S&P indices have just been terrible. They don't have very much history in them. But what we've been mapping out is this massive head and shoulders reversal pattern, and within that, another head and shoulders reversal pattern, which we've just broken out. So we are going to go and test that previous high at 9888 extremely soon. And then when we look at how the ASX Gold Index has worked against the $8 gold price, this is the misery we've had. 16 years of gold stocks falling against the gold price. Everyone's been really, really frustrated, and it's driven people out of the market. But this is about to change. We're already seeing the change. Now, we have this MPS, an index of 12 small cap gold projects, and we plotted this up. It's an equal weighted index, and we've got this declining wedge which we broke out of wonderfully well, and we picked this turn in the market. And look at the gains that we've got in those 12 companies since the low in March. MPS clients took advantage of that very, very well, and this one, but some of these others are really discounted, and there's extraordinary value in them. And what's happening now, this is the gold index against the gold index itself. And you can see that over this last 4 years, it's been misery. So every one of you who's got small stocks have felt that, haven't you? And you say, why is it so? Why are you treating me like this? I did my work, and I get pounded by the fact that small caps have really underperformed the index. The Northern Stars have done very, very well. So we've got a turn. This is up 50% against the gold index, so this is where we're going. It's going to perform very, very well. Now, we just had a wonderful presentation on Bitcoin. Who's bullish on Bitcoin? Who's bearish? Have a look at this. This is a parabola, and I'm sorry these are a bit messy, but parabola. It got up there and it's broken the parabola, and when we come along here, it's made a failure. All these goodbye kisses on these break lines, and it's just done a beautiful one there, and it's down about 58 at the moment. So do expect that Bitcoin will fall very sharply. Look at this rising wedge of Bitcoin versus gold. There's absolutely no support once it goes down through here, and it's not very far away. This is going to be horrible. Ethereum. Ethereum is the gas that makes Bitcoin translate. That's not a bull market. It's just horrible. So, where are we and what are we going to do? Well, I've been talking about the Dawes points, global boom. I first put this out in 2008, right at the bottom of the GFC. We had this rally, which was hope. It's interesting. In my view, the commodities peaked here, and what happened with gold, silver, copper, and iron ore, and tin, they made new highs. No other commodity did, and then we went back into despair. But we've gone through all this stuff, and we are now here on the breakout. Disbelief, pessimism, optimism. We've had absolutely no optimism for years. Markets, they start in pessimism, rise in skepticism, go through optimism, and then die in euphoria. Well, we haven't had any optimism yet, and we're right here. And you can see it right across the board in the stocks. So, what does it all mean? Well, gold is going higher. When I look at everything and try and put it all together, what it's telling me is that the gold price ain't going up because the US dollar is falling, because it's not. The gold price is not going up because of World War III, because I don't think so. It's really driven by India and China and now the central banks. And as far as I can work out now, everybody's buying gold. Everybody's buying gold. I talked about gold being reappraised, saying, what is it? What is it? Where does it fit in? And then being reevaluated. And now it's part of the revaluation that's coming. The only way I conclude all this is that gold is the metal of prosperity, not of crisis, of prosperity. This is a really, really important point. Now, finally, who thinks the Democrats are going to win the US general election? Unlucky. Who does anyone know a thing called Executive Order 13848? Who? Bruce does. Anyone else? Really important in terms of the bond market. And if it's going to do what I think it's going to do, we're going to see an extraordinary thing happen in 2025. And the other thing, who knows Derek Johnson? Who's heard of Derek Johnson? Well, do your Google search and see what it brings up. But we're going into an extraordinary period of time, and gold is a metal of prosperity and leading all the commodities higher. Thank you.